There's a company that holds significant stakes in nearly every major corporation in America. Apple, Microsoft, Amazon, Tesla. They all have the same massive investor pulling the strings behind the scenes. To give you an idea of proportion, this single firm manages $12 trillion in assets. That's more wealth than half GDP of China and roughly half the size of the entire US stock market. Yet, most Americans have never heard their name. In the next 5 minutes, you'll understand how your retirement savings help decide the fate of every major corporation in America. Today, we're exposing BlackRock and how they quietly became the most influential force in capitalism. The year was 1988. Wall Street was riding high on leveraged buyouts and junk bonds, but Larry Fink had just experienced the worst day of his career at First Boston. In a single trading session, this mortgage bond specialist lost his firm $100 million. That would be roughly $300 million in today's money. The culprit? A miscalculated bet on interest rate movements that blindsided even the most seasoned traders. Most executives would update their resume and disappear. But Fink saw something revolutionary in his spectacular failure. He realized that Wall Street's risk management was essentially gambling with sophisticated math. So in 1988, he founded BlackRock with 7 partners and $8 million in startup capital. Their mission was to build technology that could analyze risk in ways Wall Street had never imagined. But what started as a risk management firm would evolve into something far more powerful. And their secret weapon was just getting started. BlackRock's first breakthrough was a computer system called Aladdin. No, it's not what you're thinking about. It's actually a short for Asset, Liability, and Debt Derivative Investment Network. While competitors relied on spreadsheets and gut instincts, Aladdin could analyze thousands of bonds simultaneously. But in the go-go 90s, caution wasn't profitable. BlackRock's clients appreciated their detailed risk reports, but Wall Street's biggest players would make fortunes through aggressive speculation. But then, in February 1994, the Federal Reserve surprised markets with an interest rate hike, and the bond market collapsed. Orange County went bankrupt. Legendary firms bled. Billions. But BlackRock? Yeah, they had positioned their clients defensively and were actually made money. Suddenly, institutional investors weren't just interested, but rather, they were desperate for Aladdin's protection. Here's where BlackRock's strategy shifted from defensive to offensive. Instead of just managing risk, they began acquiring competitors who'd been wounded by market volatility. The big move came in 2006, where BlackRock acquired Merrill Lynch investment managers for $9.8 billion. And overnight, their assets under management jumped from $463 billion to over $1 trillion. But 2008 would transform BlackRock from a large asset manager into an indispensable part of the financial system. When Lehman Brothers collapsed and AIG teetered on bankruptcy, the Federal Reserve and Treasury Department needed someone to manage the cleanup. They didn't call Goldman Sachs or JP Morgan, they called BlackRock. BlackRock was hired to manage troubled assets from Bear Stearns, AIG, and other failing institutions, therefore earning hundreds of millions in fees while gaining unprecedented access to government decision-making. But this government partnership was just the setup for their real masterstroke. While managing government bailouts, BlackRock was quietly revolutionizing how ordinary Americans invest through something called ETFs, short for exchange-traded funds. ETFs are like mutual funds that trade like stocks. Instead of picking individual companies, you buy a slice of a diversified portfolio. BlackRock's iShares became the largest ETF provider globally. Here's the genius part. When millions of Americans put retirement money into BlackRock's ETFs, BlackRock uses that capital to buy actual shares in companies, and those shares come with voting rights. By 2020, this strategy had made BlackRock the largest single shareholder in 88% of S&P 500 companies. Some are controlling stakes, but the biggest individual voice in corporate boardrooms. And today, BlackRock holds approximately 7% of Apple, 7% of Microsoft, 6% of Amazon, and 8% of Tesla. When they vote on CEO compensation, mergers, or environmental policies, their voice carries massive weight. Larry Fink now sends an annual letter to CEOs worldwide outlining BlackRock's expectations. Companies restructure entire strategies around his recommendations because ignoring BlackRock means ignoring millions of shareholders. The firm that began with just $8 million now influences corporate decisions affecting trillions in market value. But here's what this means for regular investors. Lesson 1. Technology and data are the foundational leverage. BlackRock built Aladdin, a risk management system that sees threats before they turn into crises. While competitors were betting on instincts, BlackRock was measuring everything in real time. So what's the takeaway for us? As entrepreneurs, relying only on gut feeling is dangerous. The real edge comes from building logical systems that track the truth. Whether it's customer analytics, financial dashboards, or AI tools, if you can measure risks earlier than others, you'll survive when they collapse. Moving on to Lesson 2. Diversification into higher margin domains is a moat. BlackRock didn't just stick with stocks and bonds. They expanded into infrastructure, private credit, and alternative investments. These areas may grow slower, but they generate steadier, stickier revenue. And that stability kept institutions tied to them through every market cycle. And here's the lesson for us. Don't lock your business into a single stream of income. Or rather, don't rely on a single customer even if their order is huge. You should always explore alternatives, premium services, side products, and new channels. Because diversification isn't distraction. It's the insurance policy that keeps you standing when the core market shakes. Lesson 3. Scale plus passive exposure creates silent influence. Because BlackRock manages so many index funds and ETFs, they automatically own pieces of thousands of companies. That means they get shareholder votes in boardrooms worldwide. They didn't buy the control, their sheer size handed them influence. For us, the lesson is simple. Reach creates power. If you build a community, a trusted platform, or a distribution system that everyone relies on, influence becomes the byproduct. You don't have to demand power. It comes to you. That brings us to our next segment, Move of the Month. Since BlackRock isn't just history, it's still shaping headlines right now. Just this week, BlackRock announced a major partnership with South Korea's government to build AI hyperscale data centers. Larry Fink personally met with the South Korean president, framing this as a long-term bet on AI and renewable energy. It's being praised as a big win for South Korea's national strategy, and it shows how BlackRock keeps aligning itself with the technologies of the future. At the same time, in the US, BlackRock's influence is facing pushback. Their proposed $6.2 billion acquisition of Minnesota Power's parent company, Aladdin, just hit a roadblock. A judge recommended blocking the deal, citing risks of higher energy bills and a lack of public benefit. Critics argue BlackRock's private equity model clashes with public utilities, while supporters say it's the only way to fund Minnesota's clean energy transition. So I'm sure you would have learned that BlackRock's story is not just about finance, but rather it's about scale and influence. And now I want to hear from you. Do you think BlackRock's AI bet is visionary? Or do you agree with critics worried about their power in utilities? You've just seen BlackRock, their strategy, their lessons, and their latest move. Every frame you see is shaped by our team of passionate artists and storytellers, working to turn business into cinematic storytelling. If this added value to your day, hit that subscribe button. It simply tells YouTube that this work matters and helps us bring you even bigger stories. This is Fortune Fold. See ya in the next one.